Live from London, you're watching Bloomberg Daybreak Europe. I'm Lizzie Burden, and these are your top stories. AI optimism fires up markets, driving Asian stocks and US futures higher ahead of today's Fed decision and earnings from 3 of the Magnificent 7. President Trump arrives in South Korea for key meetings with Asian leaders, saying he expects to discuss tariffs and Nvidia chips with China's Xi Jinping tomorrow. Plus, European bank earnings take centre stage. UBS smashes third-quarter profit forecasts, while Santander beats on net income. We'll bring you Deutsche Bank numbers in just a moment. A very good morning. We start the show with earnings from Deutsche Bank. The CEO, Christian Sewing, of course, in the final stretch of his years-long plan to win back investors. And this is a strong set of numbers. So third-quarter net revenue beating estimates. 8.04 billion euros is what we have. The estimate was for 7.74 billion euros. Pre-tax profit coming in at 2.45 billion euros. The estimate was for 2.17 billion euros. And for fixed sales and trading, revenue at 2.5 billion euros. The estimate was for 2.24 billion euros. So, of course, the expectation had been for a strong quarter of fixed income and currencies trading, but beating those estimates substantially here. Those results from Deutsche Bank. The CFO, James von Moltke, is going to join us later here on Bloomberg. His take on cockroaches in the credit market really going to be worth sticking around for, given Deutsche's exposure to US commercial real estate. So that interview coming up at 6:30 a.m. London time. But we also, staying in Germany, have results out of Mercedes-Benz. They say that they're going to start buying back up to 2 billion euros of shares. Their third-quarter car adjusted ROS coming at 4.8%. The estimate had been for 4.7% in the previous year. So confirming the guidance that they're going to start this 2 billion euro share buyback. The top line here really trying to get investors on board here, confirming the outlook and saying that they are having adjusted return on car sales up, as I say, in the period. So like BMW and Audi, Mercedes really grappling with the waning deliveries in China and the cost of US tariffs. It's been a bumpy year. The shares up about 1.5% so far year to date. So we'll watch how they open this morning. We also, just going back to Deutsche Bank, have the numbers on fixed sales and trading. As I say, 2.48 billion euros. The estimate was for 2.24 billion euros, but that headline just going red across the terminal. So a reminder of that from Deutsche Bank. And as I say, we're going to speak to the CFO later on this morning. Those are just some of our breaking earnings here in Europe. Stateside, we also have 3 of the Magnificent 7 reporting today. A big day for big tech, and we're expecting that quarter-point cut from the Federal Reserve later on. So seeing how we are standing in markets, we've already seen strength in the Asia session. The MSCI Asia Pacific Index up 0.4%. Lots of optimism on tech after the Nvidia boss, Jensen Huang, announced a slew of partnerships and batted away concerns about an AI bubble. So more on that in a moment. But you can see here, Nasdaq futures taking the optimism up 0.4%. But European futures on the back foot. Euro Stoxx 50 futures down at 0.2% as we head towards the cash open. If we flip the board over to the cross-asset picture, you've got the 10-year US Treasury yield steady at 3.97%. The yen had been higher after the US Treasury Secretary Scott Bessent called on the Japanese government to give the Bank of Japan a bit of space to fight inflation. A very different approach, you might say, to the administration's approach to the Fed. But you're looking at the yen now weaker, 0.2% at 152 per dollar. Oil holding on to a 3-day drop just about. We're actually up a touch at $64 a barrel. And gold here up at $3,965 a troy ounce, up this morning. Well, that takes us to geopolitics, and we can dive into trade. The US President Donald Trump on the final stop of his Asia trip. During a speech to business leaders at the APEC summit, he said that tariffs are strengthening US alliances. He also expects to lower tariffs on China over the fentanyl crisis, and Trump has been really touting the deals he's struck so far.
On this trip alone, I've signed groundbreaking agreements with Malaysia, Cambodia, Japan. Our deal with the Republic of Korea will be finalized very soon, like moments or very shortly thereafter. These agreements will be incredible victories for all of us because everyone is better off when we have stable partnerships, not plagued by chronic problems and imbalances. Probably you know that President Xi of China is coming tomorrow here, and we're going to be, I hope, making a deal. I think we're going to have a deal. I think it'll be a good deal for both.
For the latest, let's go to Bloomberg's Yvonne Mann, who's following these events for us in South Korea. Morning, Yvonne. We've got President Trump touching down in Korea. He's played down the chances of meeting the North Korean leader, Kim Jong-un, of course. So what are we likely to get from Washington and Seoul when it comes to trade?
Yeah, well, Lizzie, it seems like the table has been set, right, for Presidents Trump and Xi to meet on Thursday. And what we learned with that speech, as you highlighted, was that, it was a sales pitch to APEC, essentially, that the U.S. is ready to do business with this part of the world. And certainly he talked about all these hundreds of billions of dollars of investment pledges from companies like TSMC, SoftBank, and the like, and really talking about how he wants a good deal to happen between not just Korea, which that luncheon is still underway here with Lee Jae-myung, the president of South Korea, I should say, but also with China as well. You mentioned about the fentanyl side of things. That could be sort of the low-hanging fruit of what could come out of these talks as well. He mentioned about lowering the 20% fentanyl tariffs. Didn't mention what level it could lead to, but certainly that could be a small win when it comes to China there. So certainly that could be one thing. Also, what we heard on Air Force One before he even stepped on South Korean soil was suggesting that maybe Nvidia can ship Blackwell chips to China. That he's going to be bringing this issue to Xi on Thursday. If that's the case, that would be a major concession from the U.S. side of things, of giving and allowing Nvidia to ship these advanced chips to the mainland. And up until now, we'll see how Beijing responds, but they have actually rejected or at least banned Nvidia shipments when it came to the H20, for example. And so for Nvidia's side of things, they basically said market share there is basically zero now, and they've cut China out of their forecast. So any sort of progress on that front when it comes to Blackwell chips could be a big win for Nvidia there. We already saw some movement there in the alternative exchange for the Nvidia shares. Saw a pop on that announcement as well, Lizzie.
OK, Yvonne Mann, thank you so much for the latest out of South Korea. But back to markets, stocks have advanced on optimism that AI is going to continue to drive profits at mega-cap tech companies reporting earnings this week, and growing bets on a Fed cut today. Let's get more now with Mark Cudmore, Bloomberg Markets Live executive editor. Morning, Mark. So Jensen Huang saying that AI isn't a bubble. We expected he might say that. But is the optimism in markets going to last?
I think it's going to last for another few months, most likely, is the base case scenario. I think many people are identifying what's happening in the AI sector as a bubble. Now, what's really important to emphasize is that if it's a bubble, that doesn't necessarily mean it's a bearish situation. You've got to work out where you are in the bubble. Go back to the dot-com bubble. Sure, it was a bubble for several years, and the people who made the most money out of it were the people who rode the bubble inflating. So if you identify a bubble in markets, the best way to make money is to jump on the bandwagon and ride the bubble all the way up and hopefully get off before it bursts. So what you want to identify is not just whether it's a bubble, but whether it's close to bursting. I do think it's a bubble in terms of it's concentrating too many assets. It's getting excess valuations. We're seeing a lot of circular stuff going on that just doesn't seem to, that it holds on a structurally strong framework. But I don't think it's close to bursting. The momentum is still there, very strong. It looks like the third quarter earnings will be good. So we're expected to get those results over the coming month or so. So I think the story is likely to stay strong for now. When might it burst? Well, we could be a long way off still. I would say that probably, and again, maybe there's some like black swan that I'm not thinking of, but I'd say the earliest date you're probably looking for is fourth quarter earnings in January, February. But even then seems quite early because the momentum is very strong for right now. So I think this is a bubble that might sustain well until next year.
OK, so a question of when, not if. But in the meantime, we're looking ahead to the Fed decision later today, Mark. When you've got inflation at the hottest since the 90s, how dovish do you expect Chair Powell to sound today?
Not dovish at all, but before that's interpreted as being overly hawkish, I don't expect him to guide particularly strongly either way. They've got no fresh data, no official data anyways, so they can't really provide much guidance. So I don't think he's going to provide really strong message either way. He'll emphasize uncertainty. Now, the market is pricing in that we're going to get a cut, of course, today and a cut again in December. I'm not sure that market pricing will change much. This is going to be the most boring Fed for ages. The Fed meeting is rarely boring. ECB meeting is always boring. The Fed meeting is rarely boring. But today it probably won't be particularly exciting because he can't provide strong guidance to alter market pricing either way. Perhaps there's a risk that he sounds slightly less dovish than what's priced in the market, but I don't think that's strong. This is a market that is determined to get more cuts, and it'll keep on pressing that way until they have concrete evidence not to kind of push that narrative.
How dare you say that the ECB is boring? I'll be off to Florence later on today, Mark, but we look forward to that Fed decision, of course, at 6 p.m. London time today, given the time difference. Mark Cudmore, our Bloomberg Markets Live executive editor, we thank you for the preview. Now, let's get back to bank earnings. UBS has reported profits well ahead of estimates for the third quarter. We can get analysis now by Tom Metcalf, Bloomberg's EMEA managing editor for finance. Tom, just looking at the top lines out of UBS, you've got a beat on profit expectations. It looks like investment banking revenue did well. How much of a respite is this going to be for the bank?
Yeah, I think it's perfectly timed. They've been sort of rocked a little bit by various bits of bad news over the past month or so. But yeah, you look at these results, it really shows that integration of Credit Suisse on track, but also, you know, the sort of fundamental business is wearing away. And it was impressive to see, I think it's 38 billion of new assets coming into their wealth management thing. So for me, that's right now the top line. OK, and a pleasant surprise, it seems, on legal costs also boosting that performance. It's good news, it seems, from everyone in the banking space this morning. We've also got a beat on third quarter net income from Santander. Yeah, exactly. Santander doing well, coming in ahead of earnings. And again, it looks like they've just been able to sort of keep those interest rate sort of benefits coming through as they stay relatively elevated. But yeah, no, across the board, it's looking pretty straightforward from the banks today. So maybe the executives will all be happy.
And Deutsche Bank as well, beating on trading. That's a boost to their strategy too, right? Yeah.
I think they're up 19%, and yeah, pretty much across the board over there at Deutsche Bank. It seems they've done a good job. I mean, the interesting thing there is there's a lot of people are looking, will there be more guidance on buybacks or sort of more capital returns in some ways? We haven't seen any sign of that yet. But, I mean, given they're across the board delivering decent numbers, you wonder if that might change. But they do have a investor day, I think, later in November. So that's probably when they might make any big, strategic changes or kind of target changes.
I mean, I do wonder how much we're going to hear about cockroaches later on. We'll be hearing from the CFO, James von Moltke, and of course, Deutsche really exposed to US commercial real estate.
Yeah, that's one area where, you might be looking out for some sort of bad news there on the margins. And actually in UBS, one point of interest within that set of results is there's a loss tied to an investment in an associate of about 140 million. And it's not yet clear, at least from our first scan of the results, what that relates to. So that would be a big point of focus, because that's probably been the common theme across all banks, just the odd kind of credit loss or the odd kind of unexpected provision, which doesn't quite take away from an overall impressive set of results, but certainly a lot of interest.
All right, well, thanks for threading that thread for us, Tom. And we've got a T-Live blog going on the terminal that will take you through all of those earnings as we get more developments. But later this morning, as I say, we're going to be hearing from the Deutsche Bank CFO, James von Moltke, as well as Sergio Ermotti, the UBS Group CEO, as well as the CFO of Santander. So plenty to stay tuned for on Bloomberg TV. But we've also got lots of other events on the calendar for today. If we take a look at the day ahead, after market, we're going to get Airbus earnings. We'll be hearing from the CEO, Guillaume Faury, at 8:10 p.m. London time. We also, as we've been discussing, have that Fed decision at the new time of 6 p.m. London, given the time difference is different right now. The Chair Jay Powell speaking at 6:30 p.m. And then we have a lot of tech earnings. We have Meta, Microsoft and Alphabet all reporting today, so a massive day for big tech, the start of two massive days for big tech. But you can get a roundup of all the stories you need to know to get your day going by looking at today's edition of Daybreak, which terminal subscribers can find by going to DAYB Go. But coming up on the programme, downplaying worries about an AI bubble. Nvidia's CEO dismisses concerns that the investment frenzy's gone too far. We'll get you the details on that next. Plus, Norwegian oil and gas giant Equinor reporting third quarter operating income below expectations. So we'll be speaking to the CEO, Anders Opedal, at 6:40 a.m. London time. Stay with us. This is Bloomberg.
The Fed decides.
This Fed is anchored to a massive step down in payrolls.
They are data dependent. We have no data. As far as the employment picture is concerned, I think that they have a pretty good read.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
The Fed remains on track to cut rates. You looked at the dot plot, and the dispersion looked like a B-52 bomber's wingspan.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
I don't believe we're in an AI bubble. And the reason for that is we're going through a natural transition from an old computing model based on general purpose computing to accelerated computing. We also know that AI has now become good enough because of reasoning capability, research capabilities, its ability to think. It's now generating tokens and now generating intelligence that's worth paying for.
Optimism from the Nvidia CEO Jensen Huang there speaking to Bloomberg. And we've got plenty more tech news coming later today. Bloomberg Intelligence senior analyst Matt Bloxham joins me now for more. And Matt, you heard Huang there saying that Nvidia's reached this inflection point. And AI so powerful now that customers are willing to pay for it and fund the infrastructure. How much does that argument actually stack up to all the fears about an AI bubble?
Yeah. I think to a degree, but it's definitely not going to wipe away all those fears. I mean, clearly, pretty much every business on the planet of any significance is spending money on AI right now. But I'd say they're still in a kind of discovery, almost kind of pilot phase. There's still a huge amount of analysis to be done by these businesses about the return on investment and whether it makes sense for them to continue to invest into the medium term. And that's clearly where the Nvidia and AI bubble investment case rests, is that kind of medium term spending, that we really are going in a compute transition to kind of AI-based computing. And also there's the big consumer market. You know, if you look at companies like OpenAI, 800 million customers using their platform. But the question is, how many of them are currently paying for that service, and are they going to continue to be willing to pay for that service into the midterm? Yeah, so this question about monetizing AI is really still up there for debate, I think.
Well, I want to come back to OpenAI, but speaking of the money sloshing around, you've got Nvidia planning to invest $1 billion in Nokia, kind of vindicating their decision to move away from mobile phone technology to AI. I'm wondering whether there are other European infrastructure companies like Nokia that we should be watching as a next target.
Yeah, I think so. I mean, I guess one of the obvious questions there is Ericsson. What do they have in store either with Nvidia or one of Nvidia's emerging rivals to kind of make that similar transition? Because if you think of what's happening with Nokia, it's a couple of things. Firstly, it's the expansion into data centers, which has been going on for a little while with them. But it is also about their core mobile business and 5G, which is becoming a more AI-based platform, and 6G, which is going to be a completely AI platform. Ericsson has to figure out those same technological issues and have a similar offering, so they'll need to kind of have something to say on that. So that would be the big one. But I'd say there's other broader companies. For example, Nvidia announced a $1 billion data center deal with Deutsche Telekom in Germany, which is also kind of helping to expand that capability. So I think there are a lot of these kind of partnerships coming through, and I'm sure there's plenty more to announce, not just from Nvidia, but from some of their rivals. For example, Qualcomm is getting more into this market, AMD too, Intel. So I think the next few years you can see a lot more competition in this AI accelerated chip market.
Okay, really interesting. And you also mentioned OpenAI. They're giving Microsoft a 27% stake. So that's interesting when it comes to this whole argument about maybe circular financing. But what I need to ask you about are these earnings coming up later today. We've got Meta, Microsoft and Alphabet. What should investors be focused on?
It's this kind of monetization issue about AI, particularly for Meta and Google. And I think for Google on top, it's also about the extent to which this new world is starting to eat into the old world of search advertising. Both Meta and Google heavily reliant on advertising revenue. ChatGPT, starting to kind of really change the way people search and way advertisers look to monetize that search. So that's a big question mark for both. Is there going to be another CapEx uplift, or have we kind of seen the end of that cycle and okay, CapEx isn't going to come down, but is there another leg up to come? So I think these are the big questions. And I guess with Amazon, you've got to kind of look into the real economy with the online retail business and how strong, particularly the US consumer is, but the global consumer, given that in the backdrop of all this, there is still kind of question marks about how resilient the kind of the real economy really is.
Yeah, okay, really interesting. Matt Bloxham from Bloomberg Intelligence, we thank you so much, with an eye on CapEx as we look ahead to those earnings later on today. But coming up, President Trump says that his Middle East peace deal will hold despite Israeli strikes against members of Hamas. We'll get you the details on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to your other top stories from around the world. President Trump has defended Israel's strikes against members of Hamas and said he thinks the peace deal he brokered earlier this month will hold. Israel ordered forceful strikes against the militant group in response to attacks on Israeli soldiers in Gaza, which the country's defense minister called a crossing of a line. Now, the official Palestinian news agency said at least 20 people had been killed in the strikes, citing medical sources. Elsewhere, Hurricane Melissa is expected to make landfall in Cuba just hours after it became the strongest recorded storm to strike Jamaica. The storm left hundreds of thousands of people without power on the island and forced hospitals to evacuate. Melissa crossed into Jamaica with sustained winds of almost 300 kilometres per hour, making it a rare Category 5 hurricane at landfall. Well, those are some of our top stories from around the world this morning. But coming up right here on Daybreak Europe, fixed income trading revenue comes in better than forecast at Germany's biggest lender. We're going to hear from the Deutsche Bank CFO James von Moltke next. Stay with us for that. This is Bloomberg. Live from London, you're watching Bloomberg Daybreak Europe. I'm Lizzie Burden, and these are your top stories. AI optimism fires up markets, driving Asian stocks and US futures higher ahead of today's Fed decision and earnings from 3 of the Magnificent 7. President Trump arrives in South Korea for key meetings with Asian leaders, saying that he expects to discuss tariffs and Nvidia chips with China's Xi Jinping tomorrow. Plus, European bank earnings take centre stage. UBS smashes third quarter profit forecasts, while Deutsche Bank and Santander also beat. Well, just diving into those Deutsche Bank earnings, to recap some of the top lines, they exceeded their estimates for fixed income trading. So that gives a bit of a tailwind to the CEO, Christian Saving, just a couple of weeks before he presents the new strategy. Fixed income trading rising, revenue rising 19%. They've cited a material improvement in macro products and credit trading and ongoing momentum in FIC financing. They've got record pre-tax profits in both the third quarter and first 9 months. You've got investment bank revenue up 18%, and Christian Saving saying that the lender is on track to achieve their full year targets. Now, if you step back from this a moment, some commentators have been saying that the Deutsche story is getting a bit boring, lacking the next chapter. But if we look at these results, while the new strategic outlook is still ahead, they show really that the story itself can continue, you might say, with the bank making no mistakes on execution, rebuilding earnings power, shareholder value and its reputation among clients. Also, though, keeping a stable and focused management. We've got plenty more of this on our T-Live blog, but let's now get to an interview with Deutsche Bank's CFO James von Moltke, speaking to Anna Edwards about the results.
It's a record quarter for Deutsche Bank, and really the pleasing thing is two things. All businesses are showing momentum and have been doing so for the 9 months and the 3 months. And we're on track to achieve our targets that we set out for 2025 all the way back in 2022, which is a return on tangible equity above 10% and a cost income ratio below 65%. And as you say, all the numbers are pointing in the right direction this quarter.
And can I home in a little on how you're performing in FIC? Because it does seem as if you've done better than some of the Wall Street averages, in particular around rates trading. I wanted to ask you about where you've managed to get some strength in that business.
Yes, so macro has been strong all year, up altogether in the FIC complex this quarter 19%. And on an FX adjusted basis, that's, I think, in line with the best of our competitors. As I say, macro products have been strong all year, but in this quarter, credit trading also came through with very strong results. And so we like what we're seeing in terms of both sort of the market tone, but also our capabilities, our ability to gain market share in this environment.
And the September Fed rate cut, has that helped to drive volumes, hedging, rethinking of strategies in that area?
Well, certainly investors and also, if you like, real money, so duration managers are looking to position ahead of the Fed moves. We're expecting a move today, and I think the market is pricing one in for later this year as well. There's also been a fair amount of volatility. It hasn't been by any stretch of the imagination at record levels, but there's been a fair amount of volatility all year. That's obviously been conducive to the businesses.
You've also seen some strong performance in your asset-backed finance business and then the securitization of those assets as well, James. How sustainable is the growth in that area?
Well, let me start with, we've been in that business for a very long time, over 20 years, in what we call FIC financing. And it is essentially secured financing, as you say. The spreads have no doubt been under pressure as more money comes into that market. But at Deutsche Bank, we've been able to innovate and be in sort of new structures, new underlying asset classes, and that's served us very well in terms of the front book pricing. So we're confident about that business going forward, but obviously very aware that there's more competition both from the other banks as well as the private credit industry.
And talking about private credit, we've seen a lot of focus on that area, of course. I don't see any mention of any specific provisions for losses around some pretty high-profile collapses recently. I'm thinking of Tricolor and First Brands over in the United States. Ambipar in Brazil got a lot of headlines as well. Have I just missed those, or has your business been successful in avoiding those pitfalls?
We have, and so you haven't missed anything. We weren't directly or indirectly exposed to any of the high-profile cases recently. Without chest beating, we think it speaks to the underwriting and monitoring of the portfolio. That portfolio is highly secured, low LTV. As I say, we've been in the business for a long time, so we know our sponsors and have good capabilities to sort of monitor the exposures and the underlying assets. So we're pleased to have been able to avoid, in this instance, those recent high-profile cases you mentioned.
Yeah, even if there's been no direct or indirect exposure, as you say, it's caused a lot of people to just check again at their exposures, in particular in the United States, perhaps, and other areas. Have you been doing that? Have you been taking another look at some of the exposures just to make sure that you're happy with everything?
We have. In an environment like the one we've seen, where a lot of capital is coming into the market, obviously you worry that has resulted in, call it, over-exuberance and lax underwriting standards. First of all, we are strict and disciplined about our risk appetite and maintaining underwriting standards. But secondly, you get to learn from the experiences and naturally conduct a read across in your portfolio. We've done that exercise. We're comfortable with the portfolio. But obviously, we're vigilant as well to make sure that there's nothing that looks or smells like those recent events in our books.
So that was opening trade anchor Anna Edwards speaking to the Deutsche Bank CFO James von Moltke. Anna will be back at 7 a.m. London time and take us all the way to the opening of trading of those shares. But let's take a look at how things stand in markets more broadly. We heard that optimism earlier in the programme from Jensen Huang, the Nvidia boss, of course, and that optimism on tech powering stocks in the Asia session and Nasdaq futures as well. But European futures on the back foot here as we head towards the cash open. Flipping over, though, to your cross-asset picture, we've got the 10-year US Treasury yield steady as we head towards the Fed decision at 6 p.m. London time. The yen had been higher after the US Treasury Secretary Scott Bessent called on the Japanese government to give the Bank of Japan a bit of space to fight inflation. The irony. Why, no. But the gains pairing now, Brent at $64 a barrel, and we have gold here, still shy of that $4,000 an ounce level as those China-US trade tensions dampen down and dampen demand for safe havens. But let's get back to European politics now. Voting underway in the Netherlands, an election triggered by the Freedom Party's withdrawal from the government back in June. Bloomberg's been speaking to Dutch lawmakers ahead of that vote.
We are looking at the most exciting elections for the first time in the Netherlands, having 5 parties who could potentially end up as the biggest.
I think we should have a new government before Christmas. We have been standing still for too long already.
We are too naive when it comes to our dependence from China. So I think it's good that we think about it and take some action.
We should move towards the United States of Europe with a strong European government that is able to speak with one voice against China or the US.
But I see now a broad consensus that nobody wants to govern with Geert Wilders anymore, because chaos is the last we need in the Netherlands.
And I think everyone saw that if you get Wilders, you get exactly nothing.
For more on this story, Bloomberg's Oliver Crook joins us now from The Hague. Ollie, just talk us through what shape this new coalition is likely to take now that Wilders' far-right Freedom Party, of course, has lost its advantage.
Well, Lizzie, what's really interesting about the Dutch political system, it has some peculiarities that are very separate from a number of other European governments. For one thing, there are 15 parties that are represented in the government, and that is expected to continue. Again, you only need 0.67% of the vote in order to get a single seat. So we talk about political fragmentation in Europe. This is kind of the prime example of that. So the likelihood is that basically we're going to get a coalition of at least 4 parties. It could be up to 5 parties. But what's also interesting, Lizzie, is that going into this, the polls have shown vastly different things. You could have, anything from 3 to 5 different parties being the biggest party and actually, getting the prime minister seat, which is the sort of little tower right behind me. That's the prime minister's office. So that could be any one of these parties. So these polls are underway. It's open right now. What is going to be very interesting is to see what sort of clusters will be able to form a government going into this. And this is going to be a very close election. We should say that more than 50% of the voters as of yesterday going into this are also undecided. The few things, Lizzie, that are fairly certain going into this election is, one, you're probably going to end up with a more centrist government, a more traditional government than what we saw from the last government. Remember, this was the first time that Geert Wilders, who is the longest serving member of this parliament, has ever actually been invited to be part of the government. Basically, from all the lawmakers I've spoken to and much of the reporting around this, that experiment over, the Wilders experiment is over after he pulled the plug on the government. We're going to see something that is much closer to traditional politics within the Netherlands, and that will also mean, Lizzie, significantly probably a more constructive government with regard to the European Union. But we're going to have a sort of a clearer idea of what that will look like a little bit later today. About 9 p.m. is when the polls close. We'll get those exit polls. We'll have an idea to sort of begin what the coalition building could look like starting tomorrow morning.
OK, so given those potential clusters and what might come out of this, what's it likely to mean for policy? Because Wilders, of course, has been really tough on migration.
So when you think about the 3 domestic issues for the Dutch, and we'll sort of focus on those first, the number one is housing. This is something that we see universally across the world. It is a severe problem here in the Netherlands. This is one of the most densely populated countries within all of Europe. They have issues with getting materials for new building, permits for new building. That is one of the main issues. Of course, immigration has been, again, another universal problem around Europe, and one of the main political animations, and is really what drove Wilders to be the biggest party in the parliament the last time around. And there's also questions about costs of healthcare and the price of living in general. Those are going to be the 3 main domestic issues. But Lizzie, where this has become significant at the European level and at the global level is Netherlands on a couple of issues. And the main issue, and one that I think there's been a very interesting evolution over the last couple of months. I mean, I just spoke to the sort of Christian Democratic Party yesterday about this. They have moved their position on joint debt around the European Union. That is a shift that happened this year. Yes, in part historically because of what happened in Ukraine and the need for the defense buildup, but the election of Donald Trump has been a wake-up call for many within the political spectrum within Europe. And now you have a conservative party, a frugal party, this is one of the frugal 4, that is basically openly talking about joint debt, issuing Eurobonds in order to finance defense spending within Europe, which is a significant shift. And that is something you could see with this next government, something that is more constructive with the European Union. And Lizzie, the last point something that we've been talking a lot about on Bloomberg is basically the fact that the Dutch government has retaken possession of Nexperia that has completely roiled this chip market. This Dutch company, chip maker that has been owned by a Chinese company. Now the Dutch government came in and took control of it. They do not have an exit strategy yet to how to resolve this issue. That has caused massive problems for Volkswagen, for Toyota, for all of these global automakers. So those are the domestic issues. And of course, on the global stage, Nexperia and this question of joint debt are going to be critical issues for the outcome of this election.
OK, Bloomberg's Oliver Crook, we thank you so much for the coverage live from The Hague. But I want to get back to the commodities space. I mentioned that gold had been losing steam because of the US-China trade tensions dampening down. And now we see copper breaking a record on the London Metal Exchange as we're poised for this US-China trade deal. A confluence of three factors, really. The trade optimism, but also the supply side risks as major miners have been faltering. And we have the energy transition augmenting the traditional drivers of demand. So you're looking at LME copper there up 0.8% and smashing through a record on the LME. Coming up, we're going to stay in the energy and commodities space. Norwegian oil and gas giant Equinor reporting third quarter operating income below expectations. I'll be joined by the CEO, Anders Opedal, next. This is Bloomberg. Norwegian energy giant Equinor says that third quarter earnings fell as oil prices softened and trading profits declined. I'm pleased to welcome Anders Opedal, CEO of Equinor, on the programme now from Oslo. Really good to see you, Anders. Thank you so much for coming back. We're looking at the profit having dropped on softer oil prices. Let's start there. Is $60 the floor?
Well, I don't know, but I should say a little bit softer results. But the underlying result has been really, really good this quarter. We have had a production growth of 7%, 9% on the Norwegian continental shelf, and that has kind of outweighed a little bit the softer commodity markets.
Yeah, but you've revised the guidance for your trading unit, I see, from a range of $400 million to $800 million to around $400 million going forward. What's changed in the market then to drive that negative outlook for trading?
Yeah, first we have some of the underlying earnings we had in the MMP organization has been sold away, the pipelines on the Norwegian continental shelf. But we also see a more normalization in the trading market, particularly in the gas market. Still, we see a lot of earnings in this segment. We had a previous guiding that was even lower. So this is a change in kind of how we see the market. But we are able to capture a lot of the trading and the volatility in the market, particularly on the gas trading. And this quarter, the gas trading did really, really well, in addition to very strong refining margins.
And lots of analysts have been warning that your cash flow could come under pressure because of the renewables investments that you've been making, that maybe you won't be able to be as generous as your peers when it comes to rewarding shareholders in the future. Just talk us through what we can expect in terms of buybacks and dividends next year.
First of all, regarding renewables, we took important steps in February, where we reduced the investments by $8 billion in the period from 2025 to 2027, making sure that we are able to provide competitive dividend in a very also challenging market for the renewable business. So we have taken steps to really improve our business. We have flexibility both in the investments. We are reducing our costs, so we are well positioned also to provide competitive dividend to our shareholders in the future.
Just coming back to oil prices, the IEA has been predicting oversupply for a while now. What does it mean for Equinor this year and next when it comes to the break-even for projects in the US?
Well, we have really focused on improving our business, and we have done this for a long, long time. We have seen that oil price coming down. There's been a bearish market, but there has been surprisingly been a very tight physical market. So that has, we have seen the prices between $60 and $17 despite this prediction of oversupply. We think, the OPEC countries seem to use a little bit more of that extra production themselves, and also China has picked this, surplus up and store it. With lower production or more production, and lower prices, we might see that some of the oil production in U.S. will be curtailed, and we see less investment, and that can also increase the prices going forward. EIA also said that the investments in oil and gas might not be as sufficient to keep the supply up with the declining reservoirs when the demand is increasing. So this is yet to be seen how the oil market will develop in the years to come.
I also want to ask you about Ørsted. Your chairman said last month that Equinor's relationship with Ørsted is something he's keeping an open mind about. What are the options on the table for you? Would you be in favour, for example, of spinning out Equinor's renewable assets and combining them with Ørsted's?
First of all, Ørsted is a really good company with some challenges in the projects now, but the underlying business of Ørsted is really good, and we decided to participate in the right issues. We think that our closer collaboration between Ørsted and Equinor can unlock values for shareholders in both companies. How this will play out, it's too early to say, but we will work closely with Ørsted to make sure that we can drive shareholder value for both companies.
Well, do you expect that the Danish government would be willing to sell down its stake?
Well, it's too early to say. I cannot predict what the Danish government will do, but there are many ways of working together to ensure that we can build a strong business in a little bit challenging market now, but we have a long-term view that offshore wind will be really important in certain regions. We see that in UK, in Poland, in Germany, their governments are willing to put money on the table to ensure that offshore wind will be an important part of the energy mix while transitioning into more renewables in those countries. So we have a long-term positive outlook despite the challenges at the moment.
And Anders, when it comes to offshore wind in the US, is the worst behind you now, or are you concerned that the Empire Wind project could be halted again?
Well, we have always had to live with some uncertainty. This is happening around the world, that the projects in execution are being questioned by politicians. We have the stop work order lifted. We did that in May. And since then, we have had extremely good project execution of the project. We are more than 50% finished. All the monopiles, transition pieces, all the offshore work is done for this season. So the project is developing well, but uncertainty in a big infrastructure project like this will always exist, both on the kind of project side, but also on the political side.
Anders, always a pleasure to have you on the programme. Anders Opedal, CEO of Equinor, we thank you so much for all of those updates. We've got plenty more on the show, so stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Just time to bring you some Fed charts, some term charts to set you up for the day. The Fed on the brain. It is, of course, Fed Day. It's not all about the decision itself, though. We are also expecting potentially the end of quantitative tightening. That announcement from Chair Powell as well. But a question among strategists is, has the Fed already overdrained? You can see the tailing off of reserves there. But it's also a massive day when it comes to big tech earnings. We have 3 of the Magnificent 7 reporting as well. So just flip the board over. We're going to hear from Meta, Microsoft and Apple. But as you can see here, Apple, I should say Alphabet, Apple looking to join that $4 trillion market cap club. And so Apple here in the purple looking to catch up with Nvidia and Microsoft. Flip the board over one more time. Our final theme of the day, of course, is trade. We're heading towards that Trump-Xi summit happening tomorrow. And as we head towards that and the progress on trade mounts, we are seeing the pullback from gold and Bitcoin. The safe havens with a side of excitement actually losing a bit of excitement now. Gold in a technical correction and Bitcoin on the brink of that too. That does it for Daybreak Europe. In just a few moments, we'll hear from the UBS CEO CEO Sergio Emotti. The opening trade takes it from here. This is Bloomberg.